Examples of assets. So what you need to be able to do is not tell us something is an asset. I mean, you're going to have to do that, but you're going to have to tell us why. So what we want to do when we get asked that question is say, well, let's look at this definition and apply it to whatever it is we're talking about. So an asset is a present economic resource or benefit, something we're going to get a benefit in the future from using this asset, or it could just be cash being able to spend it. 2, it's got to be controlled by the entity. The business has got to be able to determine how and when the item is used, and only the business has this right. And 3, it's got to be the result of a past event. The item was acquired by the business as a result of a transaction in the past. So what we want to be able to do is apply this to, common types of assets, well, every asset that we could possibly get asked, but we're just going to have a go at this one. How would you apply this definition to cash that you get from a sale? An account receivable, the customer who owes you money because they bought something from you on credit, haven't paid, a vehicle, and property. Let's have a go. So for each one, what we're going to do, we're going to take it and we're going to just apply this asset criteria. So, what is the present economic resource or benefit from the cash that you got from a sale? Well, it's the ability to spend the cash in the future to run the business. How is cash controlled by the entity? Well, when you think about it, it's the business and only the business who decides how and when to spend that money. If any other party came and took that money, that's theft. That's a crime, okay? We are the ones that can control it. And it was acquired as a result of a past event. What happened? We made a sale and we got cash from that sale. So together, those 3 parts make cash from a sale an asset. What about an account receivable? We signed up a customer to a contract, we provided some services or sold them a good, but they haven't paid. We've given them 30 days to pay. Well, whilst they haven't paid us and they owe us money, they're called an account receivable or a debtor. So how is that an asset? What is the present economic resource or benefit we will get in the future from this account receivable? Well, it is that we will get cash from them, from that account receivable or debtor. That's the economic benefit we're going to get is money. It is controlled by us. We can legally force the account receivable debtor to repay. We control, that there is a debt and that it will be paid. It's not like they can just go, don't want to pay it. Okay, we don't want to. We kind of control that entity, that other entity, in this case, the account receivable. What was the past event? Well, we provided a credit sale. Maybe it was a service or we sold some goods, whatever it is, that is the past event. There was a sale and a transaction made to the customer. What about a vehicle? What is the present economic resource or benefit that we will get in the future from a vehicle? It's the ability to drive the vehicle and use the vehicle in the operations of the business. We control it. It's the business who can decide when we drive it, for what purpose, where it's garaged, how much to insure it for, whether to, get it serviced, etc. We are the only entity who can control how that vehicle is used. And the past event, at some point in the past, we would have gone to a car dealership and we acquired that vehicle from that entity. That is the past event. And lastly, what about a property? Not a property we rent. Rent wouldn't be control. I'm talking about a property that we buy. Well, the economic benefit that we get from that is the ability to occupy and use the premises to run our business. That is an economic benefit, to use a property. It is controlled by us. So we're not talking about properties that we rent from other people. We don't have control of those. This is a property that we bought. Okay, and we can control how that property is occupied. We can occupy it, we can change the layout, we can paint it, we can renovate it. We might even decide to rent it out to another entity. That is our right. We have legal control of this asset. And lastly, it has to have been a past event. Well, at some point in the past, we would have acquired the property from another entity, and there'll be a source document to back that up. So the point of this is we don't know, specifically what examples we could get asked to apply this to. So that's why we want to be flexible. If you know these 3 assessment asset criteria here, a present economic resource or benefit, controlled by the entity as a result of a past event, you can apply them to absolutely any asset that a business could have.